Hey guys, Stock Sniper Trading back in action. We're here to talk about a very touchy subject that happened this past week, and it's called stock halts. Okay, so we're going to dive right into it. So a stock halt, often referred to as a trading halt, is a temporary halt in the trading of a security. Usually the halt is imposed by regulatory reasons, the anticipation of significant news, or to correct a situation in which there is excess of buy or sell orders for a specific security. So some of the most common reasons for a stock halt include major corporate transactions, which we will show you in 1 second, a merger, acquisition, restructuring, or anything of a basic news kind of structure. Significant information, both negative or positive, both the company's products or services, regulatory developments that may affect the company's ability to do business, and then lastly, some significant changes to the financial health of the company. So this is a stock that we traded called PHUN this past week. It was halted 7 times. I'm going to pass over to my man, Ron. He's going to walk you through this.
Hey guys, Stock Sniper Trading here. Hit the like button, subscribe. We got a lot of good videos coming out. Like Dave said, this is about stock halts, which is really, really important information in trading. Everybody should know about this. So here we had the stock PHUN, and in the pre-market, they came out with a positive news release, a catalyst, and it was news that they partnered with Hewlett-Packard, which is big. Hewlett-Packard is one of the biggest companies in the world, and these guys partnered with them. So upon this news, the volume went through the roof, and the price went up dramatically in the pre-market, up 60%. So Dave and I spotted this one with our pre-market scan, and we got in right at the bell at 9:30, and we took a trade at $1.02. So we didn't get an exact fill. We just want to get in the trade, so we put a market or buy-in. It filled our order at $1.02 for 2,000 shares, and we're on our 5-minute candles. So this entire 5-minute candle, it went up to $1.20 where it got halted. So we were in a position now in a halt where we're in the trade, but it's suspended now for a couple minutes, where SEC regulates why is this ticker going up so much so fast. So once everything met their requirements, this is where PHUN and their CEOs have to release their information about their material positive news. Once that was confirmed with SEC, the trading opens again, and it opens right here, and this entire 5-minute candle went up again, and it got halted at $1.40. So Dave and I were in this trade still. It was halted, so there's no reason to get out because the bids were stacking up on level 2 analysis, where it kept going higher and higher. So when we saw that when it unhalted and opened, we were at $1.52, and it kept driving up all the way up to $1.70 now. So we're in the profits, healthy profits, but we're still in an uptrend. They're healthy halts going up. The bids are still stacking up higher. So we stayed in this trade, and we rode it out all the way up to $3 here. So when this 7th halt opened up, this was enough information for us to exit the trade now. We have a bearish engulfed candle starting, and it's at a whole round number, $3. That's a psychological level to be getting out of a trade. And we placed a market sell, because when you're in a halt and you want to execute your position and get out, you need to either place a sell at the bid, or you do a market sell. A market sell is an average price at the selected time. So we weren't getting cute here at $3. We just wanted to get out of the trade. And our financial institution filled us right down here at the bottom of this 5-minute candle at $2.85. So we originally purchased 2,000 shares at $1.02. We sold at $2.85 for 179%. We made one of the biggest trades of our careers, 179%, and $3,660 on a day trade. And if we didn't get out of this position right here, if you got greedy and thinking it's going to go higher, this is what this candle down here is called a falling window. So you see after this, where it got halted on the way down, people got scared and panicked and lowered their bids to try and get out. It's called a panic sell. So they all wanted out. They were already up with big profits and they just wanted to get out of the position. So they lowered the bids. And when this halt opened up down here, it opened all the way at 218, 216, and it closed at $2. So if you didn't get out of that position originally up here at $3, 285, now it's down to $2. That's an 85-cent profit loss, which is huge. And in our next candle, the bids started stacking low again. And this candle opened at $1.56. And then there was people selling in here in the $1.60s. So this one had a lot of halts, and this is how halts work. This week had about 5 halts each day with tickers. Could be SEC is regulating these. It's an unusual week with halts, but halts can be positive or negative news. This one happened to be positive, which was really good, but you need to learn how to execute a sell in a halt to get out of your position. Again, you can place your sell at the bid, or you can do a market sell, which is an average price that the market makers will fill your order and you get your out of the trade. Also, we were talking about negative news. So companies can get halted for negative news. This is if they have insider trading, if they have financials that should be released, a due date, and they don't have their financials ready, they can get halted for that. They can get, and also stocks can get halted for circuit breakers. So SEC has it where if it goes up 10%, either up or down in 5 minutes, SEC can stop trading to review what's going on. And so this is our video on halts. We really hope you guys enjoyed it. And remember, guys, like and subscribe to us. We're going to have a lot of good material coming out for you guys. And thank you for tuning in.